Now back to Inside Real Estate. Here's Mike the Realtor.
Hey folks, we are back. Inside Real Estate Radio, website insiderealestateradio.com. Time to do a little bit of mortgage talk. We've got resident mortgage expert Terri Waggoner over at terriwaggoner.com is a website, terriwaggoner.com.
That's right.
Yes.
Good morning.
Good morning to you.
How are you?
I'm excellent.
Good, good.
What's up?
We have been doing a lot of loans that are rehab loans. And so I thought we'd just spend a minute talking about that this morning because, you know, there still is a shortage of homes out there, I think. The good, clean, ready to move in homes. And there seems to be still homes on the market that maybe they're not the prettiest. The sellers don't want to put the time and the money into fixing the house up, so they're selling it as is. And those are the homes that we can do rehab loans on.
Right.
And at Supreme Lending, we do FHA rehab loans as well as conventional rehab loans. And I kind of just wanted to touch on some of the basis for what you're going to be looking at when you're doing a rehab loan. If you're doing an FHA loan, and we'll kind of focus on that today, because you can actually go down to a 620 credit score and still be able to do a rehab loan.
Okay.
You can, as long as you have $5,000 worth of repairs, a minimum of $5,000 worth of repairs, you can switch it over to a rehab loan and accomplish the work that you want done to the house in the cost of the home, in your mortgage. You can finance everything in. You can go up to $35,000 and no structural foundation work to be done on what we call the Streamline rehab loan. A lot of companies, a lot of lenders don't do the full 203K, which is what we do at Supreme Lending. And what that does is that includes the structural foundation. So, gosh, we've said it before, in Texas, if the home that you're buying hasn't had foundation work, it will at some point need foundation work. Sure. That just seems to be the common trend in our area. Our grounds shift, and we need foundation work.
Right.
So the FHA full rehab loan allows us to roll the costs of those foundations into your sales price. And again, they're two separate loans, but as long as you are over $35,000 or you need foundation work, we'll do the full. And I just kind of want to say something real quick. I have done probably about 4 loans in the last couple of months that folks started out at different lenders to do the full rehab loan, and they stayed at the other lender for 2, 3, one of them was 4 weeks that they stayed at this other lender, only for the lender to come back and say, oh, we don't do that kind of loan. So pay attention to when you're talking with your loan officer to make sure that they at least sound like they know what they're talking about.
Right.
Because this is not either you do it or you don't do it. Okay? Supreme Lending does the rehab loans. So give us a call if that's something that you're looking into.
Well, these loan officers, they should know that up front.
They should know that. It shouldn't take them a month to figure out that they don't do that loan type.
Yeah, and if it's taken a month to get an answer, it's because they didn't know, and it comes back in underwriting. They're like, by the way, we don't do that.
Right.
And then here's the deal that you have to save. 3-4 weeks later, they come and find you, and then you can save it.
Right. Well, and then the seller is angry because they thought they were going to close, and now you're starting over with a different lender.
Yeah.
And they don't like that. And so, we have to kind of patch some feelings sometimes along the way and move forward. And typically we can close a rehab loan in 45 days or less. This one that we just saved, we closed it in less than 30 days. Now, that's kind of unheard of. Everyone was in a big hurry. Our buyers were awesome. Got us everything that we needed 10 seconds after we asked for it. So that makes a huge difference in processing the loan, obviously, is all willing parties. But that turned out well for the buyer. They got to buy their house and roll all the roll all of the rehab costs into the loan. Yeah.
But it's important to mention this because there are, like you say, so many houses that are a little bit of ugly ducklings out there. And, sometimes you end up being – you need to look at those, because it is a tight market. The ones that are good, hot, ready to go, they're going to be in multiple offers.
Right.
But those houses you're kind of talking about, oftentimes people think, oh, well, those are just for cash buyers, or hard money lender buyers. And that's really not the case, with your programs, especially when you guys cover foundation.
Right.
Because some of these ugly ducklings need some foundation work. When you can cover that, this opens it up to the traditional buyer that may live there or just the small-time investor, et cetera, versus going hard money lending or versus just only a cash buyer.
Right. Well, and there's lots of other things that we can add into the loan itself. On the FHA loan, if there's a pool, we can fix the pool. You can add a pool. On the conventional loan, if you buy a house and you have to have a pool and you find this house that doesn't have one, we can add the pool and roll it into the loan itself. Yeah. So what happens is you get a contractor's bid sheet, go to the house with your contractor, walk through the house and list out everything you want done. The contractor's then going to give us that list. We're going to send it to the appraiser. When he appraises the house appraisal report will come back to us with the value after repairs. So we close on the loan. Oh, and another point I want to bring up too is your contractor has to be approved while you're being approved. We take no chances that anything negative is going to happen and money's going to disappear. So we truly vet that contractor just like we're vetting the purchaser.
Right.
So they have to be approved as well.
Right.
So once the loan closes, the contractor begins the work, and then depending on what size of rehab we're doing, there'll be draws to the contractor. So he's not just going to get all of his money and then start working. Right. He'll do some work, he'll get a draw. He'll do some more work, he'll get another draw. So the number of draws will depend on what size of rehab that we're doing.
Right. And of course you guys have an approved list of contractors and they may already be on that list, but if not, then they have to go through the vetting process.
That's correct.
Yeah.
That's
correct.
So
when you're doing this, is this in addition or on top of your loan? Is this like a second loan or is this rolled into the loan?
It is actually rolled into the loan.
Okay.
It is not a second lien or anything like that. It is rolled. The cost of the repairs are rolled into your loan amount.
Okay.
Okay. So, I mean, it's a great program that allows you to get the house that you want. And like we've talked about so many times before, where you don't have to be competing with 15 other people that have made offers on this same house.
Right.
Go find you a house that maybe is that ugly duckling, but it's in a great neighborhood. It's in the school district that you want to be in. It's just the carpet's ugly and the walls need painting, you know? So let's fix the house the way you want it to be and leave the drama of having to bid with all 15 other people on one house to someone else.
Yeah, it opens up, a whole world of possibilities to pick up a house that's, got great bones, looks great on the outside, and then it's that house you walk in, you're like, oh man, it's disappointing. But hey, all these things are easy to fix,
right.
For the most part, mostly cosmetic, floors, countertops, maybe a little bit of remodeling, paint, etc. But yeah, I mean, if it's up to 35, that goes a long way.
It's 35 on the streamline, but if we do the full, it's not capped at 35. You can go beyond that. And on the conventional rehab loan, you can kind of the sky's the limit on that deal. If whatever you're adding to the home will stay affixed to the home, you can roll it into the cost. So if you want to put an outdoor kitchen, you can. If you want to put a pool, you can. Storage build, whatever you want to do, we can add it, especially on the conventional loan. There are less restrictions on that loan than on the FHA loan.
Yeah, it's really all about you being able to be approved as the buyer,
right.
For this type of loan. And then number two, knowing that working with your realtor and assessing what's going to need to go into it and what that after, rehab value is going to be. If that matches up, it matches up with what the appraiser sees, after the contractor bids and everything come in, then boom, hey, you're good, rock and roll.
And if the house is not livable while the repair work is done, you can even roll in your payments. in up to 6 months worth of payments into your loan amount, so that you can stay where you're staying now,
right,
and roll those payments into the loan amount, and then begin paying once you move in.
Once you're in, yeah, that's pretty awesome. That's good stuff.
Yeah, it's a great loan, and like I said, we've done a lot here lately, and we've talked about how awesome my processing team is, and they're fabulous, and now they're fabulous at this loan type as well.
Sweet.
Yes.
Well, we're gonna have to get some of those loans in the door.
There you go. I'm ready.
Let's make it happen.
That's right. Rehab specialist.
That's right. Hey, folks, for that type of loan or any other type of loan or refinance, Texas Cash Out or otherwise, get with Terri Waggoner. Her website, terriwaggoner.com. Terriwaggoner.com.
There you go.
And we will get you taken care of. We're going to take a short break, folks. See you in a few.